The latest tranche of the government's sovereign gold bond scheme has opened for subscription and you can subscribe until 16th February, that is Friday. This issue has been priced at Rs 6263 per gram, though if you pay online you get a 50 rupee discount per gram, so that makes it 6213 rupees per gram. The issue price depends on the average closing price of gold on the 3 working days before the subscription period begins. For the uninitiated, I'll quickly first run through what are sovereign gold bonds before we decide whether or not you should invest in them. They are government securities which are denominated in terms of grams of gold. They are basically introduced as an alternative to holding physical gold if you want to invest in gold. The RBI issues these bonds on behalf of the government. You have to buy a minimum of 1 gram and the maximum that you can buy in any financial year is 4 kgs. At the time when you want to redeem the bonds, you will get whatever the market value of gold at that time is. This is an easier way to invest in gold rather than buying it physically because of 3 factors. 1, there's no storage issue, so there's no risk of that. 2, there are no making charges. And 3, there are no concerns about purity. So now, should you invest in this tranche? Well, there are 3 things to consider. These are basically attractive for long-term investors. This is because they have an 8-year lock-in period, and once the bonds mature, the capital gains will be tax exempt. You can withdraw it after 5 years as well, but then it's not exempt. You also get a 2.5% interest rate which gets credited twice a year. So if you're in it for the long run, then you can move to step 2. The second thing is whether you should take into account the price of gold since it's near its all-time high price. So it depends on how much you want to invest. If it's a huge amount, then yes, gold prices are important. So experts recommend that you invest on an annual basis. Like invest some portion in this tranche, some in the next, rather than put all of your allocation for gold all at once. Experts expect gold to retreat a little in the near term, but the medium and long term outlook remains bullish. Also, the interest payout that you get twice a year, that is a plus. Keep in mind that gold has given decent returns to investors over the years. It's given 8.9%, 9.5% and 13.5% returns on a 1-year, 3-year and 5-year basis respectively. And of course, gold should be a part of your diversified portfolio. Depending on your interests and risk appetite, experts advise a 5 to 10% allocation for gold. So if you're looking to fill a gap in your portfolio, then sovereign gold bonds are a good way to invest. In fact, the RBI has just announced the redemption price for the sovereign gold bond series 6 of 2018-19. That is the premature redemption date because it's been 5 years, and that's 88% above the issue price. It was issued at Rs 3,326 per unit and the redemption rate is Rs 6,263 per unit. Hope this video helped you decide whether or not you want to invest in this tranche of the sovereign gold bonds. If you have any other doubts, do let us know in the comments below and we'll get our experts to answer them. For more such content, keep watching Mint.